Hello, good morning, ladies and gentlemen. I'm so sorry I had to place some trades before I come on live because I might not be able to do that. So that's what I was trying to sort out in the last couple of minutes. So I'm so excited to welcome you to our first edition for the month of June on the Forex Mastery Morning Live session. Happy new month, everyone. I'm so excited to come into the new month on a very strong positive note as we have been profitable in the last couple of days, at least since the beginning of the week. We were able to scoop in some significant profits across the instruments that we have been monitoring since the beginning of the week. I also have been noticing that I'm having some technicalities as regards my internet reception, and I want to confirm that we are on the same page here. So if you can see my screen and you can hear my voice at any point, please let me know so that I can be rest assured that we are on the same page. So this feedback will help me to do the necessary adjustment that is needed on this one. So for my monitoring device here, I think things are actually going on fine. But if there is any issues, please let me know so that I can quickly swap my routers to a better option. You know how we do it here. For those who are joining us for the first time, we come here every morning like this to get ourselves prepared ahead of the London and the New York session, and we have a handful of instruments that we have been monitoring since the beginning of the week. And this is is a backdrop of the weekly analysis I normally do, and the link is in the description box of this current video. That is, we do analysis during the course of the weekend, and during our Forex morning live session, we come here to review them and then decipher what our next line of action will be. We also have existing positions too we are managing, so we come here to discuss on how we manage our existing positions and how we want to be projecting what our expectations will be like for this trading session. So that is simply what we do here, and I basically analyze on the 1 hour time frame during the morning live. So if you do want to have a background knowledge of how we got to this point or why we are having this kind of structures on this chart you're seeing, then it's very, very important that you watch this video so that you can have a background knowledge of what we are talking about. So the links in the description box below are duly timestamped, and you can easily navigate to whichever center of focus you want to be looking at. So with that being said here, let's dive right into the business for today. And you know how we do it. The first thing we want to be doing here is to check on the economic calendar to see what majority in the market are actually anticipating. And you know how important the economic calendar is for us. It helps us to first of all, it helps us to also be in the same picture with the majority in the market. Secondly, it helps us to position ourselves ahead of this event, during this event, and after the event. And it also gives us a better timing so we can look out for structures around that time zone so that we can be part of any potential trading opportunity. 24 hours in the market, we have seen how the market had been a little bit risk averse in terms of staying away from the US dollar in the last 24 hours, and this is more connected to the fact that majority are still awaiting a positive resolution to the US debt ceiling. So we were expecting a key vote yesterday, but I'm not sure if the vote has happened because I'm yet to get an highlight in that regard. Probably when that comes up, I will be sharing it with you during our live session tomorrow. So the market has remained a little bit conscious in the last 24 hours, and not until this morning we begin to see some bullish traction across the US dollar pairs today. And I'm of the opinion that this might likely be in anticipation of the major macroeconomic event we are looking forward to today, coming in from the US docket. So with that being said, let's look at the economic calendar right here for Thursday, June 1st. And what we have here are two high impact events which we are going to be looking at. And the first one here is the ADP employment change. So this is a data released by the Automatic Data Processing Incorporation, and it is the measure of the change in the number of employed people in the US. Generally speaking, a rise in this indicator has a positive implication for consumer spending, stimulation, growth, and the like. So a majority are looking forward to a positive one if we have a high reading today. And if we look at the data that we have here, you will see that the previous data came in at 296,000, and we have a consensus projection of 170,000, which is on the downside here. So majority are thinking that there was a contraction in the employment status for the US economy. So we are going to be looking forward to see what the actual data is going to be for today. Will it be just as expected, below expectation, or even beyond expectation? So we are going to be looking forward to what that data is, and this is coming up in about 4 hours from now. So we want to mark that down on our calendar, or probably your alert, whatever it is, so that we can also anticipate that event. Then we also have the ISM manufacturing PMI, which is coming up in about 6 hours from now. And this is a data released by the Institute for Supply Management, and it shows us the business condition in the US manufacturing sector. It is a very significant indicator, of course, as it gives us the overall economic condition of the US. And a result above 50 is considered to be something positive, while anything below 50 is a sign of contraction in the economy. And looking at the data we have here, the previous data came in at 47.1, which is of course obviously below the 50 mark, 50 gauge, that is inciting a positive environment. And the consensus projection here even is coming a little bit lower than the previous data, which is 47. And so we are going to be looking forward to what this data is going to be like. Is it going to be as expected, below expectation, or even beyond expectation? So all these expectations we have here, we are going to definitely see the anticipation of majority of participants in the market on the chart reflect on the chart as price action, which is what we are here to review and see how we can, of course, position ourselves ahead of both the London and the New York session today. And remember that we have a very high impact event coming up tomorrow. That is the non-farm payroll, which of course will be considered in making significant trading decisions today by the majority of the key players in the market. So with that being said here, let's dive right into the business for today. And as usual, the first commodity we normally take on is the US oil spot. So on the US oil, you can see here, it has been a very, very profitable week for us, as we have been selling this commodity since the beginning of the week. And as you can see here, I think we sold just right below our key level, which we identified at the beginning of the week, just exactly around that $73 area. And since that moment, we've seen a breakdown, retest of that structure, hereby pushing price further to the downside. And we were lucky enough to be part of this bearish move as we continue to rather move all the way to the downside, adding more positions at the breakdown of key structures which we highlighted on the chart. So it has been a very, very profitable trade for us on the US also far this week. However, during our live session yesterday, we were able to identify this simple setup you can see on your screen right here, where we spotted price action being caught within a range between the $69.80 level and the $69 area to give us a structure to work with during the London and the New York session yesterday. And you know how we do it here. Whenever we have this kind of simple setup, we want to wait patiently for price action to give us a signal, which always comes in the form of either a breakout of the resistance line or the breakdown of the support line. And with our buy stop and sell stop placed at both ends respectively, we saw how price action got our sell position triggered just right below the $69 area. And you know one interesting thing about this position here, I had two accounts which I was trading on, and before the live session yesterday, I normally place my orders just to make sure that I'm already getting ready to be part of any move whenever I'm on live. And I forgot to place the sell stop order on the other account. So while I finished the live session, I came back, I realized that it's only one of my accounts that got that position triggered, which was quite painful anyways. But we were grateful that price action even came back to retest that structure to give us another opportunity to be part of that move, which came in during the later part of the New York session. But price action didn't move significantly as the previous impulse leg that we had here. And I can see here we saw how price action moved over 150 pips on the first leg here, and the second leg moved over 140 pips in our favor before we started seeing the buy pressure that began during the later part of the New York session yesterday. And you know how we do it. Whenever price action moves significantly well in our favor, we definitely want to be moving our stop losses accordingly to secure our current position. And I hope you did that. And if you had done that on the USOilSPOT, you would have been able to lock in some profit on this one before price action took us out of this position. So this morning here, when I was trying to monitor what is really going on the 1 hour time frame, I begin to realize that there is a tendency that we could likely see a reversal pattern around this area. I'm not yet affirmative about this one because I'm in a little bit of a limbo here, as I'm still waiting to see how price action is going to be reacting to that $68.60 level. So I shared this update this morning with this simple setup here. After identifying buy pressure resume around the $67.50 area, and this was during the New York session yesterday. And during the early hours of today, we saw another buy pressure resume around that area. And one interesting thing about the buy pressure this morning is the fact that it was unable to break. Buyers are gradually gaining some momentum at this point in time, and we could likely see a reversal pattern coming anytime soon. So what I'm doing right now is to remain very patient, to wait out for structures to mature. So now let's talk about the expectation that we could have a buy pressure around this area. So if we take into consideration the impulsive move that brought us to this point that we are here, you will see that price action broke down into the structure. We saw the first touch at the $67.50 level. Price climbed back into the $69 area, as you can see here. And the inability of price action to break down the previous low has a tendency of giving us a reversal pattern. And for us, with the situation we have here, there is a high chance that we could have a double bottom structure. And you know how we do it. Whenever we start sensing that a double bottom structure or a reversal pattern is gradually unfolding, the next thing we want to be doing is to ensure that we identify our neckline for that structure. And coincidentally, the neckline of this potential reversal pattern also shares a confluence with that support line of the channel we identified yesterday. And because of the situation here, we have that area as our neckline, and we are waiting for price action to break out of that neckline to validate the potency of this reversal pattern. So we need to be very, very patient around this area. So that is one of the buy expectations I'm looking forward to at this point. Then there is one more thing about the breakout of that neckline, if it so happen, is the fact that it also shares a confluence with this trend line that we have here. If you had been with me on both my TradingView and Telegram platform, you will remember that during the course of the New York session yesterday, I projected this trend line where I identified a bearish trend line after connecting the series of lower highs, giving us something to work with going forward. And if price action breaks out of that potential neckline of this reversal pattern we are talking about, there is a high chance that the trend line may no longer have the capacity to continue to negate bullish attempt, and anything above that structure will definitely welcome buying opportunities, and also look out for more opportunities to buy above that area. However, if price action continues to trade below that level, then there is a chance that we could have a bearish move. But from this current structure and looking at the situation we have here, having higher lows in the last 12 to 15 hours, I'm of the opinion that we need to be very, very patient and wait for confirmations to happen before we want to join any bearish move at this point. So what I'm going to be looking out for here, as you can see, after connecting the series of higher lows, we have a trend line to work with for today. So what this simply means is that if price action remains above the trend line, we'll feel comfortable in our buy position while we are looking out for more opportunities to buy. But if price action drops below the trend line, then at this point we will start considering selling. Sorry, hold on a second. I'm trying to hold on a second, please. Okay, I think I'm back. All right. So like I was saying earlier, I said if price action now breaks down this trend line, then definitely we want to be anticipating a bearish move to the downside. So what I'm going to be looking out for to sell here is to see some breakdown of structure. Remember, I'm not going to be jumping right in. As I said earlier, I want to see some retest of structure on my lower time frame to give me confirmations to join this move to the downside. And it's going to be showing something like a retest of the trend line or this descending trend line here, which is highlighted in red on your screen. Continued selling pressure for me to now feel comfortable to sell. And if we are selling at this point, we want to be mindful of that demand zone identified at the $67.50 area, as we want to move stop losses to secure the current sell position and wait out to see how price action will react to the zone, and that will determine if we are going to be adding more sell positions to our existing trade or getting ready to buy the US oil spot at that point. So these are my views here on the US oil spot today. If you have any questions, feel free to let me know right in the comment section. So I'll try to take some 10 to 15 seconds out to see if there are any questions, and at the same time use that to solve my technical issues which I'm experiencing here. Please let me know if you can see me and you can hear my voice, because I've been having a little bit of complications here. I'm not sure if okay, I think things are going on fine now. All right, so here we are. So that is that on the US oil spot. So in the absence of no questions, I want to assume that we are on the same page here. So moving on, we are going to be talking about the GBPUSD. So on the GBPUSD, okay, I've been out of my position right now. We had a sell position below the 1.243 this morning, and it appears price has taken us out of that position right now. And okay, let's see how this goes. So since the beginning of the week on the GBPUSD, we have been buying actually. And one of the reasons why we have been buying is the fact that price action is one, above our key level, which is at the 1.2340 area. And you know how we use our key levels. We want to make sure that as long as price action remains above that key level, we want to look out for buying opportunities in this market. And one thing we also saw at the beginning of the week, which also supported the idea of buying the GBPUSD, was the fact that price was a little bit choppy, and this whole choppy situation was happening above that key level, and was a sign that sellers were finding it very difficult to break down that key level. And for me, it's a sign that buyers are really strong around this area. Though we had an attempt by the sellers to break down the structure on Tuesday morning before our live session yesterday, and which later turned out to be a false breakdown. And since then, we continue to see buy pressure from that area continue to move price to the upside. And with the breakout of the 1.23580, we had our first buy position for the week. Then we also added more positions at the breakout of the 1.23750 area. So we saw our price move significantly well in our favor. The first position moved over 80 pips, and the second position moved over 60 pips in our favor. So it was quite a profitable first half for the week for us on the GBP USD. Then we went on to talk was it not yesterday? Okay, yes, yesterday during our live session yesterday, we also acknowledged that as long as price action remains above the 1.23750 and the bullish trend line that we identified here, we continue to look out for buying opportunity. With another breakout of the 1.23750 again, we were able to add another buy position, which of course moved over how many pips? That is about 70 pips in our favor on that first one. And yesterday also we added another one, had the breakout of the 1.243, which did not last long. And I hope you did move your stop loss accordingly to lock in some profit at this point. And if you had done that, you would have been taken out with some profits on that one. Now that we are going into the London and New York session today, what is going to be our plans on the GBP USD for today? The first thing you would observe on the 1 hour time frame here is the fact that since the beginning of this week, though we have been seeing a bullish traction in this market, but one thing for sure we saw here is that as soon as price action got into that zone within the 1.245 and the 1.243 area, we have been noticing some selling pressure around that area. And for this reason, we have seen our sellers had continued to negate the bullish attempt to break out of the zone. So we need to be very, very careful here, as we will consider this area as a strong selling niche in this market. And the only way we shall be thinking of buying the GBP USD today is to see price action take out all the sell positions here, which will reflect on the chart as a breakout of the zone. And it's not until after a breakout of the zone happens that we want to start considering buying the GBP USD for today. So I'm looking out for buying opportunity only if price action breaks out of this supply zone to the upside. So that is how we are going to be buying the GBP USD for today. And from the look of things right here, I told you earlier that we had a sell position this morning, which I shared on my TradingView and Telegram platform, that we are going to be selling below the 1.243. Let me show you quickly, for the sake of clarity, what I talked about. So this is my TradingView platform, and the same information I share here is also what I share on the Telegram platform. So let's see my commentary this morning on the GBP USD. So this is how we were buying the GBP USD during the course of the week. And this morning I made mention of this here. I said secure all buy positions. We are open to a possible retracement if price drops below the 1.24300 with continued selling pressure and more buying opportunities above the 1.245. and here we had a simple setup identified on the 15 minutes time frame, where if price action trades below or selling pressure continues below the 1.243, we want to be looking out for selling opportunity. So I actually took advantage of this opportunity here, and before the live session I moved my stop loss after price moved about how many pips was that? About 20 pips, moved my stop loss, and at this point I've been taken out at break even. And if you had done so as well, you must have been taken out at break even at this point. So right now, with the current situation, we want to be very, very careful, as price is currently trading around the 1.243. So for the next couple of minutes, I think for the next 30 minutes, we want to see how price action will be reacting to that zone. So if continued selling pressure happens around the 1.243, probably on our 10 minutes, 5 or 15 minutes time frame, then we want to start considering a trend continuation to the downside from that point. But if price action breaks out of that level, then that will negate the selling opportunity, and then we will be waiting out to see how price action will play out going forward. So for us to have a better perspective into what is going around the 1.243, we will need to scale down to a much more lower time frame. And for the sake of this session, let's look at the 15 minutes time frame to see how price action is playing around that area. So I would rather use my the new chart I published this morning, so that we can have a better perspective into what is really going on around this area. So look at what we have here, and on the 15 minutes time frame, you will see that we already have a breakdown of the 1.243, and price is back into that zone. And from a technical standpoint, whenever we see price action break down a key structure, just like what we witnessed here a couple of hours ago, there is a chance that price could come back, retest that zone to incite another wave of momentum to the downside. So we want to be very careful here and wait out and see how price action will react to this level. So this current candle here is about 12 minutes old, so we still have about 3 minutes, 40 minutes for this candle to close. So let's wait and see how this candle closes, and probably a couple of more candles to make an informed decision to sell the GBPUSD below the 1.243. So we'll continue to monitor price action and see how price relates to that area. And one more thing I would like to add here is the fact that since the early hours of today, price action has been looking bearish, giving us lower highs. So I would want to connect the series of lower highs here, so that it will also serve as a yardstick to guide our trading activity today. So what this simply means here is that as long as price action remains below the bearish trend line, we feel comfortable in our buy sell position, and we look out for more opportunities to sell. So like I said earlier, we could still see something like price action coming in, doing a couple of retests of that area to incite another wave to the downside. So these are things that we shall be looking at during the London and New York session today. But if at any point in time price action breaks out of this trend line to the upside, taking out all the sell positions along that trend line, then at this point we want to start considering going back to our bullish expectation in this market by looking out for buying opportunity, buying pressure above this area to join the bullish momentum to the upside. And trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So that is that on the GBPUSD. So I will be moving on to the next instrument for today, which is the let's take the XAUUSD first of all, after which we now talk about the USDJPY closing for today. And on the XAUUSD this morning, we have I shared an update here this morning on the XAUUSD. So let's look at that quickly so that we can be on the same page. And this is my TradingView platform and the XAUUSD publication. And this was how we have been managing our position on the XAUUSD so far this week. And in fact, we have been quite profitable, though it's not as significant as what I expected it to be so far this week. But at least we are still on the positive side on the XAUUSD. And this morning I shared, okay, this is what we said this morning. So I said here, buy position taken out with some profit as price action approaches our key level at the 1960 zone. And as long as price action remains above the ascending trend line, the potential for buying opportunities still remain valid. So I said here, as long as price action remains above that trend line, definitely we want to consider our bullish expectation. So this simply means that if price action breaches the trend line, then we shall look out for selling opportunity. And in fact, I missed out on this opportunity as I was so carried away with the expectation that buyers will come in again around this area, but missed out on the fact that sellers were trying to push price to the downside. We have been seeing lower highs here since the New York session yesterday, and the fact that the 1970 level has been negating all attempt by the buyers to break out of that structure. So I shared an update immediately after that. I think a couple of minutes, or I think about 30 minutes after that publication, I shared something on the 15 minutes time frame, which I want us to look at here. And this is it here on the 50 minutes time frame. And remember, our key level for the week is the 1960 level. And you know how we use our key levels here. Our key levels helps us to position ourselves appropriately ahead of any move. So if price action remains above the key level, we continue to look out for buying opportunity. And if price action breaks down our key level, we look out for selling opportunity. And in this case scenario, we have seen price break down the key level here. I told you I missed out on this opportunity, but for those who are taking advantage of that opportunity there, well done to you for being on standby to catch that move, as you will currently be running with over 60 pips in profit, which is not bad actually. So let's see how price action play out from the structure. For me personally, and for those who had missed out on the breakdown of the 1960, what I'm looking out for is a retest of structure for me to join this bearish move to the downside. So I would rather remain patient, waiting for another new structure to mature, which is likely going to come in the form of a retest of the structure, which also shares a confluence with that bearish trend line that you can see here to incite another wave of bearish momentum to the downside. So this is what I'm going to be looking out for to continue my sell opportunity in this market. But if it so happens that price action does not do a retest of structure, it's not all the time this kind of situation happens. So especially if we have a very, very strong momentum, then we want to wait out for trend continuation patterns around that 1955 and the 1954 area. And if I give a visual representation of what I'm talking about here, it's going to be something like this, where price action continues to consolidate between that range, then leading to the breakdown retest of structure, confirming the strength of the sellers at this point. So let's see how price action plays out around this area. For those who took advantage of the breakdown of the 1960, definitely you want to be moving your stop loss right now to secure your current position while we wait out and see how price action will be playing going forward. So that is my expectation here on the US or on the XAUUSD. Then another thing I would like to acknowledge here is the fact that price is currently around a support line, which we also want to take into consideration. And that is around, let's see how that is around the 1954, I think. When we bring back our candle chart, we could make some adjustments if need be. So we have a support line here. So let's see what happens. Okay, so I think it falls just exactly along that area. So we label this area the 1954 level, while we look forward to see how price action reacts to this area. So remember, I told you that we might likely see a retest of the structure to join our hard more position to our existing sell trade. And if that does not happen and we begin to witness a choppy situation go on here, something like this, which I explained earlier, that price continue to range within probably the 1956, then at this point we are going to be looking forward to a breakdown of the 1954 to be part of a bearish move to the downside. Trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So that is what we shall be looking out for to sell the XAUUSD today. Now, there is one thing I also want us to take note of. We don't want to ignore the potentials of buyers here. We have been bullish on the XAUUSD since the beginning of the week. And remember, we also have a key level at the 1,960, which was broken sometime during the course of the week too as well. And in this case scenario, despite the fact that we are looking out for selling opportunities here, we can't ignore the platform around the 1,954 and the 1,950 area, which has been a strong demand zone since the beginning of this week. And if it so happens that a bullish momentum begins here and leads into the breakout of the 1,960, which of course also shares a confluence with the trend line which has been supporting this bearish momentum in the last 24 hours, then at this point we want to start considering buying the XAUUSD. So if a breakout of the structure happens, we go into our lower time frame, look out for retest of this level, then we want to be looking out for patterns that will support a trend continuation to the upside. So from this current market structure we have right now, we are not going to be buying the XAUUSD unless price action breaks out of the 1,960 level. Anything below the 1,960 at this point is still looking bearish, as we have a trend line there which is going to be serving as our yardstick for trading activity today. So if you do have any questions regarding what I just explained, or you need me to shed more light in a particular area, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. So that is that on the XAUUSD for today. Let's be on standby, continue monitoring price action, and see how we could take advantage of any potential opportunity from this point. And for those who are with me on my TradingView and Telegram platform, you shall be receiving an update as at when due. So we are going to be moving into the last instrument for today, which is the USDJPY. And on the USDJPY, we have been witnessing an interesting situation in this market. So since the beginning of the week, we have been selling the USDJPY actually. And one of the things that supported the idea of selling was the fact that price was trading below our key level. Remember, at the beginning of the week, we had a key level at the 140.750 area, which you can see here. And look at what we have here. Since the beginning of the week, price action has been trading below that area. So after identifying a choppy situation where price was ranging between the 140.920 and the 140.530 area, we saw the breakdown of the structure here on Monday before our live session, which we obviously missed, and we said we are going to be waiting for a retest of structure to happen, which actually did a couple of times before price action continued to trade to the downside. And we had a couple of more opportunities to add more sell positions here. But one thing about this whole structure is that the sell positions we had never stayed for long, as this market has been quite choppy in the last 48 hours. And one of the reasons why we can attribute this to is the US debt ceiling saga, which is yet to be resolved. We were expecting key votes yesterday from the Congress. I'm yet to get an update on that one, but probably before the end of the session, probably before the end of today, I will get something and I will be sharing it on my public platform on that one. So this is one reason why I think we have been witnessing some choppy situations around this area. So one thing we are going to be doing here, we already have our sell positions taken out, of course, in the last 24 hours. And I shared an update here this morning as regard the USDJPY. Let's quickly run through it on my public platform, then we go right back in to see how we intend to take advantage of any potential trading opportunity today. So this is how we have been trading the USDJPY so far this week, and this is what we have been doing to take advantage of the bearish moves we had here. So this morning I shared an update. Let's see. Okay, I said after price action takes out the last sell position with a small profit, price is currently trading at a significant confluence along the 139 0.700 level, where it has a confluence with a descending trend line supporting the bearish momentum since the beginning of this week. So a breakout retest of this confluence has a tendency for buying opportunity, while a drop below the 139.70 will, with continued selling pressure, will welcome selling opportunities. We continue to monitor price action ahead of the ADP employment change and manufacturing PMI data coming up later today. And this is what I was able to see here. 18 pips running in profit after price action triggered the buy stop order above the 139.700 area, and I told us all to secure all buy positions. And let's go back into the live chart right now and let's see what I just explained here and how we intend to manage this position right here. So like I said, since the beginning of the week, we have been selling, and to further emphasize the strength of the sellers in this market, we were able to connect a series of lower highs on the 1 hour time frame to give us this bearish trend line. And going forward, going into the London and New York session today, this trend line here was going to be of significant impact in deciding what our next line of action will be. And right now that we have a breakout of the trend line, in fact a close above of the trend line, it's a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. So if this scenario persists and continues, then we want to be looking out for more opportunities to buy at the breakout of the 140.00 area to continue to join the momentum to the upside. So let's see how this plays out in the next couple of hours here. So move your stop loss to your break even at this point, and let's see how price action reacts to the 140.00 level, which will definitely determine how we are going to be taking any position from this current point. And if you look at the structure we have here, it's looking as if price action is gradually transitioning into a reversal pattern in the form of an inverse head and shoulder pattern. And to give a visual representation of what I'm talking about here, look at the impulsive move into the side at the 139.4. We had the left shoulder formed, we have the head, and price action is still going through a transition phase where we might likely see price retest the bearish trend line to give us the right shoulder of that head and shoulder pattern, where the 140.00 area will now turn out to be the neckline upon which a breakout will confirm the validity of that reversal pattern. So this is what we are going to be looking out for around this area. So it's looking a little bit more bullish, but we want to be very mindful that sellers are still dictating the pace at this point, and we cannot ignore the potentials that sellers could actually shake out a lot of buyers from this market to push price to the downside. So in as much as we are looking out for buying opportunities, with more opportunities above the 140.00 area, we cannot ignore the potentials of sellers here. And what do we want to see on this chart that will give us an insight into the potentials that sellers might likely come in? Well, for me at this point, I'm still very mindful here of looking out for structures, and the reason why that is simply because of this shooting star candle, the hammer candle we saw here, which for me is a sign that buyers are very strong. And another thing here is that this area is close to our support line of the ascending channel. So let me show you on the 4 hours time frame. So on the 4 hours time frame, remember yesterday we had an ascending channel and we had this whole structure figured out, and we agreed here on Monday that we might likely see price action retrace into the support line area to incite another wave of bullish momentum to the upside. And with the situation we have here, and looking at the sharp rejection of this area and the inability of price action to even come close to that support line, could be a sign that buyers are gaining momentum and sellers could not even get anywhere close. So because of the situation here, I'm still very mindful of jumping into any sell position at this point. So on the USDJPY, I don't have any sell bearish idea at this particular point in time, but if structures mature in that direction, probably in the next couple of hours, I will definitely give an update in the comment section of both my TradingView and Telegram platform in that regard. For now, I'm still holding on to a bullish bias here, waiting for price action to break out of the 140.00 area to give me more opportunities to add more position to my existing trade on this pair. So let's see how price action plays out going forward. And trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. I think on this note, I'm going to be calling it a day here. It has been a wonderful moment, and I'm very sure and confident that we are all equipped with the necessary ideas and strategies to take advantage of any potential trading opportunity during the trading sessions today. And if you are with me on my TradingView and Telegram platform, you will definitely get updates as at when due. I wish you best of luck today, and hoping to see you in the comment section, both my TradingView and Telegram platform, as we continue to monitor price action. Do have a wonderful day, everyone, and once again, happy new month to you all. I love you all. Bye bye.